Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a morning quick look at the sterling versus US dollar. Today's date is May 8th, 2023. So let's get started. Looking at the hourly chart, despite the fact that it's a holiday in the UK, we do see continued trading in the pound versus US dollar, and the price moved higher and then lower and then back higher. Again, in up and down trading, we are currently trading back to the downside. And the high price that we see here was a multi-month high. We'll see where it fits in on the daily chart just shortly. But the high price moved above this level at 126.65, which I have outlined as a horizontal line. Price moved up to 126.68, just about 3 pips above that level, but could not maintain momentum above the level and started to rotate back to the downside. So, off this hourly chart, the price is still bullish. In last week's trading, the price on Friday's trade, the market came down sharply after the U.S. employment report, but stayed above the 100-bar moving average, and that was somewhat significant. At the time, the Fibonacci retracement level was not at the 50%, but we broke below the 38.2% retracement, could not sustain momentum, and then reestablished support at the 38.2% and near the lows from earlier in the day. That helped to push the market to the upside. So there was there still is some bullish bias here, well above the 100-bar moving average, trending to the upside, held support above these old highs right through here. So things are looking a little bit more positive off the hourly chart. But we have this 126.65 level, which I want to look at now. And if we go to the daily chart, we can understand further what that level's importance is. And if we go to the daily chart and go back in time and look at these high prices through here, this high price up here came up to 126.65, 5-ish type area, maybe three, and stalled the rally before the rotation back to the downside here. So just over this month of trading right here, ceiling, fall. And so that level becomes a level of importance as we move back up toward it. And it took all the way to this time to get back up to that level, and we are finding sellers against that high level, I would think, to start the trading week this week. If we are going to go higher, we need to get above that level, and that would open up the door toward the 61.8% retracement of the move down from this high, going all the way back to, it looks like June of 2021 to the lower here. That level will be the next key target near the 127.60.5. But for the time being, we start seeing that ceiling put on the pair against those old highs going back to this month in April, May of 2022. So be aware of that. If we on the downside right here, that the low of that swing area comes in at 125.987. So keep that level in mind as well. In trading today, the low price has come in at 126.20. So still about 22 pips away from that area. So be aware of it. If we move below that level, we're outside of this swing area. Could see further downside probing as a result of the failed break and the resistance against this swing area. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.